Hey guys, this is Abs and Drake on digital, and this is the episode of DeFi Top Signal number 3. Today's date is March the 6th, and we have a lot to talk about. Again, this is a podcast where we discuss everything crypto and Web3 Alpha, discuss uh, such macro trends and old and new DeFi game theories, strong narratives, and of course, our favorite NFTs. Um, I'm here along with Drake. What's up, Drake?
Yo, what's up, guys? How's it going? Oh wait, you can't respond. Anyways, guys, we're gonna jump into episode 3. We're gonna go ahead and talk about a couple of things today. I know that Abs wants to talk about owls. We were chatting about this before we even kind of hit the little live button thing. But Abs will go over owl NFTs, and it's kind of like checks, and then we'll go and get into some DeFi stuff.
Yeah, so Owls, the Owls NFTs just went nuts, and the idea is, I think this has been a talk of the town in the NFT realm all last week, and literally the Owls NFTs is just it went from 0.02 to 0.5. Literally, it's just insane. I read somewhere on Twitter that some guy threw in 1 ETH when it was around 0.02, 0.03, and he took profits anywhere around 0.2. He took out 11 ETH, which is just insane money. Going from 1 to 11, that's just insane. So current price is sitting at 0.3, 0.32.
Yeah, I'm looking at it right now.
Yeah, so it's really strange. I mean, this is one of those crazy phenomenons. It's much like checks, much like even Goblin Town. I remember when Goblin Town came out, it was the first free mint type of NFT collection. And no one's heard of the artwork is very ironic, and it literally went up to maybe even 8 ETH at one point, and yeah, it's been slowly bleeding since. But yeah, it's one of those things where you can make insane gains, and it just comes out of nowhere. And I think owls and checks are, basically this year. I mean, this owls has come out in the last week out of nowhere. I haven't heard of it. The website just has a link to the OpenSea collection, and it has a link to their Twitter, and that's it. There's nothing else.
These things are actually pretty cool. Like,
They are cool.
whoever
Yeah,
thought of this idea was genius, man.
yeah. So there's
Basically, for
yeah.
anyone who's just kind of like listening, or actually, we don't even show what it looks like. But these owls are basically created using different characters. So, like, it will be like a 0, an O, a hash, a line, and they're basically just spaced out to where it makes the shape of an owl. It's pretty cool. Yeah, check it out, man. If you go on OpenSea, just type in OWLS. There's 10,000, well, 900 or 9,999 items, and actually the price was at 0.005. So the gains were
Wow.
even more than what you were thinking. It's crazy. I mean, it
Yeah.
wasn't there long, so yeah, basically it was 0.02 when you could have actually got in, because this thing it took off like a rocket ship.
Yeah, and just this month, it literally was created. This collection was created in early March, right? And today's March the 6th, and already the total volume is over 9,000 ETH.
That's a lot of
That's
volume.
what the hell.
That's
10
that's that's pretty big.
10% is listed. There's 32% unique owners. I don't know what to make of this. I just think it's one of those plays where, you get in, get out. But if this is going to stick, and if you're already in this early on, take your profits and maybe let a moonbag ride. I don't know. I don't know how to play this one, but it came out of nowhere, and I think people are very bullish on this apparently on crypto Twitter. So who
Yeah, for
knows?
me, what I've learned with NFTs is always get three. Now, I don't know about for this one. This thing's already took off like nuts and ham. I wouldn't touch it. Just me personally, because I stink at NFTs. But like, always get three if you're ever looking to get in on a NFT and get in early. The reason for that is you have one to take profits. Well, get your principal back. So basically, you get your initial investment out. Second is to take some profits. And third is your moon bag. So that's usually why it's always good to get three. For me, NFT wise, the NFTs that I like are like checks. All of mine got sold from a pseudo swap pool, so that's a long story. But I still have some exposure to Jack Butcher with O'Peppins. And another one I really like is Sappy Seals and the Potatoes. The Potatoes is with a dude called 9gag. Once you listen to a couple of AMAs with him, you instantly realize he gets it. Um, it's sauce. But basically, Potatoes kind of took off this weekend too, because they announced with their questing that if you wanted to get some of the bonus potions that they have, you have to have either a full team or a full crew. And in order to get a full crew, you have to have 1 captains and then 3 potatoes. So there's only 0.9% of these things listed. That's how much demand there is for these things. Most of them are questing.
It's nice to see that ecosystem plays are how they move together in unison. They're basically in lockstep, and it's awesome to see when captains move and everything else within that ecosystem, the same exact ecosystem, captains, potatoes, they all move at the same time, and it's great. So basically, if you have one of each, then you're you're sitting pretty nicely in terms of profits.
You're moonbagging.
Yeah, exactly. So with along the same exact wavelength, NFT marketplace for Amazon is rumored to launch late April, and the date is a TBD. I would say this is on April 24th. This might be the trigger to an NFT phenomenon where the price of all collections could either moon, which probably that's my bet, and obviously not financial advice, but I think that might trigger some type of spike in volume when it comes to having all. I think they already confirmed 15 collections. I think those collections are still kind of a question mark at this point, but you can probably speculate it might be the top 20 or the top 30 if you look at Blur or OpenSea, and any of those 15 collections that signed up for Amazon's launch on its platform, they could be having some nice volume there on late April.
Yeah, I think eBay made an announcement of doing something similar, allowing you to be able to buy and sell NFTs. Now, it's not a marketplace. Like, I wouldn't see it as like a launch pad or a marketplace like we're saying on Amazon, but it's more so just like a random NFT place. That's what I've heard. I don't know if it's 100% confirmed, like if it's going to deploy or whatnot, but I've just heard rumors on that.
Yeah. So it's something to look out for in late April. There is another. So top news is the Amazon rumored to launch their NFT marketplace late April. The Owls, and one thing I want to talk about was the last 2 episodes you were talking about Velodrome and optimism, right? Velodrome
yeah,
went nuts.
Yeah, Velodrome is that one's one of my favorite ones. What's interesting about these solid leaf forks and these flywheels is that they're going to compete with Uniswap V3 as in concentrated liquidity and whatnot. But to understand how to build the best VE33 fork and to dominate is first you need to have DEX aggregator integration. This is like your 1inch, Firebird, etc. Because these things are like Walmart or Sam's Club. They make their profits by doing a lot of volume. If they're doing volume, they're going to do well, and they typically offer the lowest prices. Second, they need bribes from these partner protocols to incentivize lockers. And also, if they can get some auto compounders to deepen liquidity, this will help as well. And for the model to survive, it's essential to have this sustainable economy to where you have bribes and fees incentivizing buying the token. Second, you have the increased APR happening because people are buying the token. With this higher APR, this deepens the liquidity because people are coming to chase the yields and depositing into the pools. When you have deeper liquidity, you bring more traders. With more traders, this brings a higher staking APR. And once you get a higher staking APR, this means more holders are going to come. stake, lock, and then you have this not self-sustaining flywheel, but you have this flywheel to where you have a feedback loop of traders bringing more liquidity and liquidity attracting more traders. Now, the reason why I really like Velodrome, even though it is competing with something like Uniswap, is they have incentives that the other forks can't really offer. Now, Equalizer, I like them on Phantom because they don't have to compete with Uniswap v3 and they aren't dealing with concentrated liquidity. But on Optimism, they are able to help this flywheel or at least bootstrap a portion of this flywheel until it can take a larger portion of the market share by giving out the OP incentives. Because Optimism has their own token and the Optimism Foundation is incentivized to keep the Velodrome flywheel rolling. The reason for that is because it produces a lot of transactions on the chain. And if you remember how Optimism works, the transactions on the chain, a portion of those fees go to the Optimism Foundation. So they want a lot of volume and a lot of transactions on their chain. That's also why they did the Optimism quests, or like the little NFT thing in the beginning, to stir up volume and transactions on their chain, because that's how they drive revenue. And they give out airdrops to people, so it's like a flywheel with the similar to something like Curve. But going back to Velodrome, Velodrome is it's different than the other chains of being able to compete with the concentrated liquidity with those incentives. If you look at the other chains like on Arbitrum, the reason why we haven't had a successful fork is because they are not able to keep that flywheel rolling with concentrated liquidity eventually winning out. If you look at Sliz, if you look at Sterling, if you look at Excalibur, they can get some meaningful TVL as well as some volume, but they run into the issue when that flywheel starts to break apart as people are starting to realize, or not realize, but they aren't getting as much fees as they should because Uniswap is eating a huge chunk of those fees. And if you look at the fees on Uniswap compared to the rest of the chain on Arbitrum, let me see if I could pull this up. Yeah, so if we're on Uniswap right here and looking at the DEX volume, the wrapped ETH USDC pool is getting $112 million in volume, whereas it only has $30 million in liquidity. That's, oh, what is that? 1, 2, 3. That's a 4x and almost a 4x in volume. Now let's compare this to Sliz. The Sliz wrapped ETH pool, actually let's do even comparison. Let's do wrapped ETH USDC. Actually, it doesn't even pull up on Sliz anymore because the liquidity is so horrible. I guess we can do ZyberSwap. Now, ZyberSwap, they did add concentrated liquidity, and that's why it says V3 on this pool. But the wrapped ETH USDC pool is actually starting to pick up some traction, but it's not as good. ZyberSwap has $9.8 million in volume and $10.2 million in liquidity. The difference between that is on ZyberSwap, it's a 1-to-1, whereas on Uniswap, it's a 4-to-1. So that means it's getting about 4 times the volume of the actual liquidity. So it's earning so many more fees, and concentrated liquidity is able to give better prices because all of that liquidity, instead of being ranged into 0 to infinity, it's actually slapped into a small trading range. And if ETH is trading sideways like it is, it's going to have most of its volume going to Uniswap. And that's why Velodrome is actually able to stand out apart from the rest of the competitors on other chains that have to compete with Uniswap, is because they can keep incentivizing the flywheel if the volume isn't enough by saying, hey, look, you lock your tokens, we'll give you an OP incentive. And that's kind of how they're able to sustain with that flywheel. But that's kind of enough on Velodrome. When you're looking at these different projects and you're looking at a solidly fork, look for the ones that don't have to compete with concentrated liquidity, like the one on Equalizer on Phantom. I like that one. And there are 2 other ones, or there are actually 3 that are coming to Avalanche. But the reason why I like Avalanche is because they aren't dealing with concentrated liquidity with a meaningful TVL. Yes, there's some deployment over there, but there isn't anything with a meaningful TVL.
So when you were talking about Velodrome on Optimism, have you taken a look at OPX at all? OPX is a decentralized spot and perpetual exchange, and you can basically leverage on there. Have you played around with OPX at all?
So for Optimism, my play for the Perps exchange is going to be on Quinta. I
Gotcha.
haven't played with, oh yeah, OPX. It could do something. How's their? I want to see their stats page. Stats is always what I look at. Yeah, the volume looks to be doing pretty good. Um, what would you say? Trying to see where I can see their
So
daily stats.
Yeah, so just a little background on OPX Finance. It's a GMX fork, and obviously GMX has been such a strong player in the Arbitrum ecosystem, and OPX is sitting at a liquidity of like a little under 700K. Market cap is around 5.2 million. It literally over the weekend. Let's just talk about numbers really quick. Over the weekend, Velodrome on the 4th of March, 2 days ago, we looked at and then to the price point today, it literally increased anywhere from at close to 46% over the weekend. So that's Velodrome. OPX, let's talk about that really quick. On the weekend, again, 2 days ago, it went from $3.78 at the low, and currently at $6.42, and that's a 71% increase in over the last 2 days. And if you want to TA this really quick, if you look at anywhere from that $7.20 to $7.50 breaks that resistance, and literally we're going to be going to all-time highs on OPX.
So do
And
they have OPX VE Velo? Is that them?
VE Velo,
OPEX VE Velo? It
I
might
don't.
be someone else. It might be someone else. I'm looking at the Velodrome pools, just trying to see why these guys are getting so much traction. But looking at the Velodrome pools, I can kind of see why they are. It's because they get some pretty high APRs. So like OpenX or an X OpenX, it's like 180% APR on Velodrome. You're getting like a OPEX VE Velo and ETH 308% APR. So this is going to be reflexive to Velodrome doing well because people are going to be, if the APRs are high enough, they'll buy those tokens in order to earn a yield on them. So the reason for me personally why I don't like OPEX is looking at their stats. If they're a GMX fork, I'm a stats guy. I like to look at the data and see what it's doing. If you look at the stats page, you can see most of the volume is coming from the swaps. So looking at this token for me as a GMX, like, hey, I'm buy this for the stats and what it does. From leverage trading, from that perspective, I wouldn't go at that perspective because most of it is from swaps and it's not from margin trading. So margin trading is like, I don't know if you're looking at the stat page or whatnot, but most of this volume is from swaps. So if you compare this to something like Level Finance or GMX, most of their fees that the protocol earns is going to be from leverage trading, which is what
Mhm,
it should be, because that's
mhm.
how the protocol is generating profits. Whereas if it swaps, it's mostly from speculation on the OPEX token. And maybe, just maybe, they're able to use Velodrome as their flywheel. Now, if that is the perspective you're looking at it, like a Velodrome flywheel or an ETF, similar to something like F-Bomb or One Ring, then I could definitely see it doing something like that, just being reflexive to Velodrome. It would be an interesting play for that. But for me, my play on the derivative protocol on Optimism is Quinta, mainly because of the flywheel that it has, and it also offers a lot more, what do you call it, options for trading. So instead of just like how many does OpenX have? One, two, three, four, 6 different options: Bitcoin, ETH, and some stable coins and OP token. On Quinta, you have 25 plus, and you can even do some Forex with that. And the flywheel on Quinta is when you are trading on the platform, you basically get trading for free because you're going to get rebates in the Quinta token as long as you're staking the Quinta token. Now, just because you're staking the Quinta token doesn't mean that's like the full shebang there. The tokens that you're earning when you're staking, as well as the trading rewards, those are escrowed for 1 year. So if you wanted to claim those tokens before the 1 year period ends, 90% of those tokens are burned and 10% are given out as liquid. So this is a really, it's not a low market cap token. Well, it is low market cap, but the actual market caps you're seeing on CoinGecko and Dex Screener, they're kind of a meme, because if more people are claiming this, the market caps are actually going to decrease because those vesting tokens are basically just going to be burned, 90% of them. And if you look at the stats page on this thing, this one is also pretty spicy. Last I checked, remember we were talking about it last, it was like 600 milli. Was that it?
That was it.
It was, yeah, it was about 600 milli. So in about, what was our last podcast? 4 days ago?
Yeah, it was on Thursday or Friday. Yep.
Yeah, it's already over 800 million trading volume. So this thing, it's getting a lot of trading volume because people are incentivized to keep trading on the platform compared to something else. Because with a derivative protocol and leverage trading, traders want the best prices and the lowest prices in order to trade on them. And with Quinta, basically giving rebates for trading, in theory, your trading is free. So with the trading being free, it's kind of like, oh, well, I'm just going to do all my trading here. And basically, it does have a little bit of wash trading in it, but it's going to run out similar to something like Vela. Vela is doing something similar over on Arbitrum, to where they're basically paying people to trade on their exchange, hence why the fees are going nuts and ham. But it's both a good and a bad. It's good short term because you get a lot of this volume, but maybe bad long term because you get a lot of, you kind of basically had that big can that you've kicked down the road. But if people are vesting it early, 90% is burned, so it kind of creates a win-win situation. Juiced volume, less tokens if people are burning them, and so on.
Yeah, I remember last week we were talking about Quinta, and literally it was in price discovery mode. And I think at that point in time, the price of Quinta, this was about 2-3 days ago, was sitting around $490 or so, maybe just say flat 500. Since then, it went to an all-time high of $628 per, and it's literally retracing right now, but it's getting bought up. It has some really, really huge buys coming in with like $13,000, $7,000, $8,000. It's amazing to see.
It's one of those illiquid JPEG tokens. I'm
Yeah,
not saying
right.
it's a illiquid like that, but most of the supply you see out there is either locked or not even circulating. So
Yeah, so just looking at it from a from just like an ecosystem standpoint, you have OPEX, not OPEX, you have Optimism just exploding. Like these projects are like Velodrome, we talked about OPX, and we also talked about Quinta and these other, it's just a lot of opportunity that's in the market right now. It's exciting times because Optimism has partnered up with Coinbase, and Coinbase is using the OP stack as a governance structure, and it's a lot of bullish catalysts that's coming out for Optimism across the board. So invest wisely and bullish on the ecosystem.
yeah, and this goes to show what a solidly fork does to a protocol. Velodrome has the dominance on Optimism is like 35% or like 32%. And being that its dominance is so high, everything is going to be reflexive to it. And the reason for that is the APRs are denominated in that. If you look at these solidly forks, they are basically the liquidity black hole for the chain. As the Velodrome token goes up in price, you can expect the rest of the chain to be reflexive of it because people are like, oh, well, I don't want to buy Velodrome now. It just juiced like, I don't know, 30%. I'm just going to farm it. So they look for the highest ones that give the highest yields, like OpenX OPX Finance. This one has extremely high yields on Velodrome, so people are coming to chase after them. You also have high yields on Ring, and you even have high yields on a token called SLM that's paying out 567% APR. I've already looked at this token. This token's basically like no liquidity, but if you look at SLM, I guarantee it's up in price. Yeah, Solmax. Let's see. Yeah, from its lows, it's up like 300% within 2 weeks, 3 weeks. Just people chasing yields. That's all it is. And optimism token is also up as well.
Yeah. So looking, I just want to switch gears here really quick with optimism. We can't talk about that much, right? Because we talk about it all the time, and there's so much to talk about optimism, so much to talk about with Arbitrum. But we're literally just picking out the ones that are potentially bullish and why we're bullish on it. And Velodrome has been your call since episode number 1, and I see it, I believe it, and you're the solidly expert, man.
I wouldn't say I'm the expert, but I get wrecked a lot. So
no worries. So do I. It happens to all of us. But yeah. So the last few times we dished out some episodes, we really forgot to talk about the BTC DeFi, right? Stacks. Let's talk about it. Let's dive a little deep into it. Here, throwing out some stats really quick. So Stacks went from 20 cents to $1, and this literally happened in under like a month. And that's almost 400 gains. And the ecosystem, I took a look at that. Took a nice little snapshot here. The ecosystem currently has a TVL of almost $25 million. With the dominance, there's only about 4 protocols that's deployed on this ecosystem, and the top one is Alex. It's called Alex. It's a DEX. That alone has literally 91% dominance. So let's talk about it, right? So Alex is probably the DEX of choice at this point, and then number 2 would be the one right underneath that. It's the how do you say that? Arcadia?
I call it Deco because that's a token DIKO. But man, they need some better names for this. That's why I'm laughing. The names are okay. If your name's Alex, no offense to you, man, but we need some better names.
Yeah, I mean, okay. So looking at the farms on Alex, it looks pretty decent, right? We have APRs that's around the top one. That's Alex to USDA. USDA is the native stable token that's on the ecosystem, and that's also deployed from Deco, right? So Deco is it seems like Deco is the collateralized debt position. So basically, you just add your STX tokens to this platform, and you can borrow against it. You can also add your BTC on there as well, and then borrow against that. And then you just do some DeFi strategies where you just deploy LPs on Alex. It looks like that's typically the only play at this point in time. I mean, if you have some money on the side, buy some STX, send it to this ecosystem, and then start farming and yielding away. So on Alex protocol, Alex is farming the APR on that is currently around 159% APR, and you can get dual yield, right? You can earn Alex, you can earn Deco, and then this other one, it looks like there's a question mark on this one, which is an IDO. So yes, at this point in time, you can earn 159% APR on Alex and Deco tokens. Any comments there?
Yeah, so in regards to Alex itself, it's similar to, I want to say it's like a curve model. Make sure. No. Okay, so with Alex, you can basically just stake your Alex tokens, but it seems like they offer boosts, if that's what I'm understanding, with some Alex power. So that's why I was thinking it looks like a curve model. I haven't dug really into the Alex token, even though it's the number 1 token on there. The one I've mainly looked into is Deco. It's a lower market cap token. Basically, the Deco is Arcadio or or KDCO, whatever you want to call it. That one's like a MakerDAO fork. That's basically the TLDR on it. The token is mainly used for governance, so it's more of a meme. However, you can farm with the token, so some people may speculate on that. You could stake your STDCO token in order to earn additional yields. It's like a Lido Finance type of setup, but it's also considered a MakerDAO fork with the stable coins. The reason I say MakerDAO is because, or when I say, I didn't mean to say Lido Finance, I meant Liquidity Protocol and LUSD. The reason why I say Maker is most people know what Maker is. A lot of people don't even know what LUSD is and Lido Finance. But in reality, what it actually is a fork of Liquidity. And basically how you're able to get the token or the stable coin you actually get is going to be the X or USDA is their little stable coin. But with stacks, you have to understand when you're playing around with these DeFi protocols over here, the block times are like 10 minutes. So you got to be patient when you make a transaction. They are going to have an upgrade. That's why I think it's pretty bullish for stacks. It's going to happen later this month or the beginning of next month. And even if the DeFi doesn't work out as well as expected, my conviction on this is that you have a massive audience of Bitcoiners who are now able to get behind and rally behind something. So one of the biggest communities in crypto is probably Bitcoin because it is Bitcoin. Most of the money is behind it. And being able to rally behind something like this, you can kind of look at what DeFi did to Cardano prices. Even though the DeFi was horrible, the hype up into it, it was crazy. And I could see that same thing happening with stacks and Bitcoin, like the DeFi moment for Bitcoin would be what stacks did with the DeFi, or what Cardano did with DeFi implementation.
So
price action wise, not financial advice, of course. That's just
yeah,
what I'm looking at.
I just want to pick your brain about something really quick. So if you were a BTC maxi, and you had your BTC on some type of USB, as you should, would you really want to bridge your BTC or whatever it is, to this? We can't utilize MetaMask at this point. We're only allowed to use Hero Wallet or the Xverse wallet, and these are web and desktop and mobile wallets, but. And is there? I didn't hear any rumblings about consensus basically, rolling out an RPC that would support stacks as a token, and then basically we can utilize MetaMask down the road to do DeFi things with under this ecosystem. So I'm just wondering how this conviction of yours, and it's a solid one, right? Understanding BTC and understanding this potential, do you really see this exploding to the likes of being in the top 10 in terms of TVL?
I don't know if it'll be top 10. I mean, just like Cardano, it doesn't do anything. I would like to see the upgrade with stacks to see what it does, to be able to have a better conviction on it. But I do see there are already a couple of Bitcoiners out there talking about stacks, like, oh, this is our moment. This is whatever. The Bitcoiners have something to rally behind. Just like they had digital gold to rally behind, they want something to rally behind. Whereas everyone on Ethereum is just like, oh yeah, we got this, this, and this, and this. And Bitcoin's like, we got ordinals. You can trade NFT, or you can mint an NFT. Oh yeah, dude, we've been doing that on Ethereum for like ever. But Bitcoin wants to rally behind something. Just imagine when DeFi comes out, they're like, look, we got Bitcoin DeFi. And it's like, okay. But it's something they want to talk about. They can rally behind it. And I mean, just looking at the market caps compared to Bitcoin stacks, just going relation-wise, I mean, I see it at least getting some traction. I mean, it's basically free marketing from Bitcoiners. Now, not all of them are going to be like, yeah, do DeFi. Some of them will even say, oh, yeah, it's just a parasite. It's a scam. Don't mess with it. But others who have somewhat of an openness to DeFi, but they never want to get over to Ethereum because it's not, I wouldn't say whitelisted, but it's not given that the blessing from Bitcoin. They wouldn't touch it. Whereas with Stacks, they're like, oh, well, this is like Bitcoin DeFi. You have my blessing. Check out Stacks if you want to play around with DeFi. Don't use Ethereum. Ethereum's our competitor. Use Bitcoin DeFi. Like I could see that happening.
Yeah.
Now, I'm mainly looking at that and then just deploying to Stacks and some of the lower market cap coins to just see what happens. I mean, obviously, as soon as you make like a 2x, 3x, always get your principal back. And then after that, who cares what happens? If it goes up, great. If it goes down after you take profits or get your principal back, who cares? You already got your principal back. It's a moon bag.
True. So, I mean, these yields are it's not that bad. And it's not absurd to the point where it's scammy, but they're not bad to speculate on. And we're sitting at 26 TVL with this ecosystem. And if you want to speculate, by all means. I mean, it's and I'm just kind of thinking about from if I was a BTC maxi, how would I want to play this, DeFi, this DeFi ecosystem that's built on top of BTC, and it might actually generate some traction. I honestly think that this has a potential future. Obviously, ETH is being number one. It's probably will not be replaced. Top 20 maybe down the road. Who knows? But this is something that it's an innovative ecosystem that is starting to kind of gain traction. With especially being bullish on the Stacks token, the STX token, which is available on Coinbase. So it could be something to note down the road.
Yeah, no, I definitely agree with that. It's, in my opinion, it's worth a spec play to see what will happen.
Yep.
Again, not financial advice, but yeah.
Yep. Yeah, so moving along here, there's the solidly forks on AVAX, and I haven't seen. I mean, you wanted to talk about this, so if you could just let us know what you're seeing.
So there are a couple of them launching. There's like a super speculative one, no docs, no nothing right now. It's like some snake finance or something. I saw it yesterday. Haven't even looked into it. But two of them that are going to be launching later this month, March 25th, and the other one, it's like March 30th, I think. Glacier Finance, which is March 30th. And then you have Flare Dex. These are going to be some solidly forks. Flare Dex, I was listening to their AMA. They did mention they are going to be airdropping some tokens to some of the users, testing out the Dex, being active in their Discord, just being a part of the community. Yes, you will get rewarded some tokens. They have been KYC'd on RugDoc. I listened to the AMA. I like the dev. I like what the team is doing. I don't know like them personally, but Fiery Dev is in there. Fiery Dev is a beast over at F-Bomb. That guy gets it. He knows what he is doing. I didn't even chat about F-Bomb with Velodrome, but that one's also reflexive to Velodrome because they have a huge bag of Velo, and they're also up with Velo being up. But going back to these Avalanche forks, or solidly forks on Avalanche, these are important, and I think they will get some traction because they don't have to deal with the competitive landscape of concentrated liquidity with like Uniswap. There is concentrated liquidity there. I believe Kyber Swap is deployed on there, and I think Trader Joe is starting to do concentrated liquidity, but they don't have a meaningful TVL in that for it to really matter. And the solidly forks offer this liquidity black hole to where I believe most of the liquidity will go into this, similar to like you saw on Velodrome, on Optimism, and like you're seeing with Phantom and Equalizer. I do want to add some other forks and some other chains that are worth noting and looking at is Cava. This one's kind of out of the blue, but Cava, they really don't have many protocols on there. But there is two protocols that are, that they're already launched, actually. It's Mare Finance and Equilibre. These are lower market cap tokens. and they are degen, they are risky, but they have a nice flywheel setup because Equilibre is basically the solidly fork, and then Mare Finance is basically a fork of Son. It's a borrowing and lending platform. But the catalyst for this is Cava's $750 million on-chain incentive program. If there's only a handful of dApps, that money has to go somewhere. And I see them going to those protocols. And you know what they say. Look at Cava. Or well, not look at Cava, but you know what they say. Don't fight the Fed. Look at Cava like the Fed. They are the printer. And if they're saying, hey, look, we got capital to deploy, I'm not going to fight the Fed. If they want to distribute it to these protocols, just do what they say, man.
Yeah, you're also playing into that narrative. I think it was like a year and a half to 2 years ago, where you had incentive program after incentive program to utilize, utilize that ecosystem. Like BSC had it, right? Phantom had it. I think Polygon had it, right? And then AVAX or Avox, however you want to call it, Avalanche had it, and we did see a big, huge spike in TVL every single one of the times. That they would announce, "Hey, we're actually doing an incentivized, play here, and if you want to join join us, do not fight the Fed here." And they're printing that money. Yes, it has to go somewhere. Might as well be in your pockets, right?
That's what I'm saying.
Yeah. So do you know when it's going to start?
So for Cava, I think they're going to be juicing. I want to say it's like a milli into Equilibre. I think that's going to be this month. I don't know when it is exactly, but they're going to be juicing these protocols. I don't have the exact layout of their plan, but I was talking with some of the guys behind it. Basically, this is an incentive program for the devs and team, and it's going to be a similar layout to something like Phantom and Optimism, to where they pay out the teams and devs, and the devs and teams are incentivized to share that with the users because this brings in the growth, like you've seen with Velodrome and Optimism. They're getting paid by the Optimism Foundation for deployment, and they're sharing that with the users, and they're creating these flywheels. So let's go on DeFi Llama, and I'll show an example of what the OP incentives did to Velodrome. So if you look at Velodrome, they started the OP grant. This was back in July 14th of 2022. They started at a 26 mil TVL. As soon as the grant was awarded, it literally took off in about 2 weeks from 26 mil TVL to 136 mil TVL at its peak. And then, of course, we all know what happened. It went down after they had like the whole thing with Gabagool or whatever, that Gabagool FUD. If you weren't around for that, basically stole $350,000 of the operational funds, which looking back is like peanuts now because this has 314 million in TVL. Basically, after they got over the dev FUD, it was a couple months sideways, and then we took off to the races again.
Yeah, so Cava basically is at 81 cents. And the previous peak was in August 2021, and that was around $8.60. So that just tells you that there's so much more room to run. And it might be a good time to even start stacking some Cava tokens during this bear cycle.
Yeah, I will say Cava is going to have a lot of inflation from this incentive program, but you're right. It's probably going to be reflexive to that, similar to like the OP token and Optimism. That would probably be one of the kind of go-to plays on there that most people are like, hey, I want exposure to Cava. They buy the Cava token, just like Polygon and Matic. And if you really wanted to get into the nitty-gritty and go into the details, looking at some of the Cava DeFi ecosystem tokens like Mare Finance, Equilibre, those are the newer ones, and I'm sure there are going to be a couple more. The reason why I like Equilibre and Mare is, first, Equilibre is a solidly fork, first one over there. I like the solidly model. And Mare Finance, if you guys look at Son on Optimism, that thing went from less than a penny to over 32 cents So you probably been following Sun, have you?
I
Or
haven't. Yes.
Sony?
Yep.
Yeah,
Yeah. So
Sony
it's
is
either
been
Sony,
up.
Sunny. It's either Sone.
Yeah, whatever it's called.
Yeah. SONNE. But yeah, so Equilibre looks like it's at the TVL is currently at 1.3 million, and then Mayor Finance is at 13.5 TVL. So very, very low TVL, in my opinion. And then Kava Lend has the dominance currently of 41%. And then the ecosystem has a little less than 200 million. So when we see this, we can kind of take a look at, the last time that Kava was actually exploding was, again, it was the peak of the bull cycle, and that was around October, November of 2021. The Kava ecosystem had a TVL of almost 700 million. So being that it's at only 200 million at this point, there's a lot of growth, and if they're having this incentive program, this is a clear sign that it could possibly and potentially be a nice little kind of set it and forget it type of play where farming during the bear cycle, like that's literally should be the play, for your favorite DeFi plays.
As always, time will tell.
Exactly. So I did want to just kind of talk about really quickly about Polygon, the ZK-EVM. Yes, ZK zero knowledge is kind of like been the ongoing narrative across the board because it's supposed to increase the increase scalability and speeds, low cost, all of that jazz. I wanted to talk about the Polygon mainnet for the ZK-EVM. That's essentially going live later this month. It seems like a lot of bullish catalysts are coming out later this month, but that's March the 27th for the Polygon ZK-EVM mainnet. That's the beta coming out, and I think this actually might spark a little bit of the Polygon narrative, where a handful of these tokens in the Polygon ecosystem could thrive and potentially be pretty massive. I wanted to kind of highlight one certain protocol, which would be DFIN. Now, DFIN is a protocol that was the very first, believe it or not, the very first limit order where you can provide when you can swap, right? We can swap with a limit order, set it and forget it type of thing. And you can farm it as well. There's a bunch of decent APRs on this. But from a technical perspective, I've been kind of keeping my eye on this. The previous DFIN all-time high was, and I kind of want to take a second here and kind of highlight. The peak, I think it was around $2.50. And at the current price point where DFIN is at right now is around 5 cents, 5.5 cents. And it's creating kind of like this Adam and Eve type structure where it looks like an Adam and Eve or it looks like a cup and handle. It's kind of creating this handle right now. But it's, even though it's at 5.5 cents or even 5 cents, breaking that 6 cents level and holding that could potentially yield some nice gains, and it could probably double from where we are right now. Obviously not financial advice, but this is when the mainnet goes live for the Polygon ZK-EVM later this month. This could be the huge, the big catalyst where this can potentially push plays like DFIN and QuickSwap. You know, it could moon. It could moon potentially. And I actually have a small bag in DFIN, and potentially this, if I'm looking at the 6 cent level really hard, and I think that this might be a decent play for a flip. Only if BTC would play ball with us,
Doesn't
right?
nuke.
Exactly. So if it nukes and all that stuff, and the 22nd of March is when the Fed is going to increase rates, either by 25 or 50 basis points. Obviously, time will tell on there. Like with that date, I think the idea is that you want to set your farms, forget it. You want to stack these tokens up during the bear, and I think DFIN is on the lower side in terms of market cap because it's only I think it's around sub 10 million market cap. I'm basically ready for Defi to explode here.
Yeah, I think I farmed some of that. Like, what was that? 2 years ago with Polygon DeFi. I might have some coming unlocked. I gotta
Yeah,
go
I mean,
check to see if that's unlocked right now.
yeah. Surprisingly enough, I think Polygon ecosystem, the TVL, has like no one is really talking about their ecosystem at all. Ever since QuickSwap came out, ever since DinoSwap was a thing and Iron Finance was a thing, where Mark Cuban was rugged, um, I had a little piece in that, and I didn't get
Oh,
rugged there. I got out early, but
oh, so
ever since
you
that,
rugged me.
was that you? Were you in it as well?
Yeah.
Seems like you're in. Yeah, I mean, I had to get 10 Matic and borrowed that from somebody to push literally 5 Matic for gas, and it literally took every single one of those 5 Matic tokens and it pushed me through, and then all of a sudden it just slowly died.
Crazy,
But
man. I
yeah,
remember that. That was nuts.
that was nuts. But I don't know. It was the Wild Wild West, and it still is. But yeah, since then, it feels like, everyone moved out of that. And I wouldn't say everyone, but most of the yield definitely decreased over time since that time. And they moved into, obviously, it was the Solana summer, right? That was amazing. And Terra, right? And then we just kind of moved over to all these other chains. And here we are with Arbitrum and Optimism talking about that. So, but yeah, something to look out for. Something could be, pretty big with Polygon. This could be the Polygon narrative starting at March the 27th. This is the date I'm looking after, and then this is the 6 cent level I'm looking for Defi.
Sweet. Yeah,
Yep.
no. I think that would be a good play, reflexive to Matic. I remember that back in the Polygon bull market. Same thing with Cheat Owl, My Finance. I like those guys over there.
Yeah,
Have
they're
you
doing
heard
really
of
well.
them?
Oh yeah, yeah. Chi or Key, yeah.
Yeah, key. That's what it is.
Yeah, and I guess to close out, you want to talk NFTs again really quick, and I kind of want to plug Valhalla once again. I think episode 1, I was talking about Valhalla, and it was sitting around 0.8. I'd like to shout out that right now it's above an ETH. It did a quick swing high to 1.2 over the last week, and then it came back down to kind of retest this 0.8, 0.9 range, and now it's sitting at 1.15, 1.12 level. And there's a couple of bullish catalysts happening later this month as well. Again, March narrative of 2023. And I obviously see that there's a this floor price should be well above this ETH mark in the next few weeks. Mark my words. Not financial
Sweet.
advice.
No, hey, I believe you on that, man. You got the best call on the gaming tokens. I or gaming NFTs. Man, I got to get back into that to figure that stuff out. I used to be a big time gamer, and the stuff basically clicked for me. But NFTs, man, I got to work on that game bad.
I mean, it's tough. It's tough to work on that because NFTs is just it's jumping from collection to collection to collection. And if you're not within the top 10 collections, you're literally trying to, you know, barter, trade, beg, borrow, and steal type of thing with other, pump and dumps, and then derivatives of those, right? And then you're trying to buy and kind of get in and lock yourself in with one of these top 10 or top 20 market cap NFT collections. That's what it seems like, right? But
That's a good
really
point.
wanted to take a look at Valhalla and to see where. Okay, it's a PFP type of play, but what they're trying to do is to take market cap away from the likes of Twitch, right? And again, if they only take 5% or even a few percentage points from the market the revenues, right? Even 5% of that, and just in 1 year, you have a lot of cash flow in terms of Stack Studios being the recipient of that revenue, but it's only going to be reflective to how Valhalla is going to be, successful down the road. Again, esports, it's a huge industry, and there was a story that I heard on early on when I was investing in Valhalla. Somebody basically said that one of their siblings, who is not into Web3 or not into crypto at all, and they had a little bit quick discussion about esports. And then they brought up, without even bringing it up, that sibling brought up Valhalla. Hey, have you heard the NFT collection Valhalla? And the sibling that is actually invested in it came back and said, "What do you mean? How did you hear and where did you hear about Valhalla?" He said everyone in esports has heard about Valhalla at this point. And
Crazy.
this was 2 months ago. So just throwing it out there. I think that this is the next blue chip. I'm going to keep singing it every single time on every single one of our episodes on DeFi Top Signal. I'm just excited.
When this is 10, when it goes to 10 ETH, I'm going to look back and be like, man, I don't get it.
Snag yourself one. Just snag yourself one.
Yeah, might as well, man.
Yeah. So it's an interesting play, and they're building continuously, and they're very, very. The community is just popping off. It's insane. So, but yeah, that basically wraps up our episode. Drake, it's been awesome. It's been a pleasure. This is episode 3 of DeFi Top Signal.
And you know how we end it.
Yeah, thank you for joining.
Yeah, we got to end it with a wisdom one-liner.
Mm-hmm.
We got Proverbs chapter 10, verses 12. Hatred stirs up conflict, but love covers all wrongs. What does that mean? Let's love each other, man. That's how it rolls.
There it is. Appreciate it.
Dude, I appreciate you jumping on, man. Good podcast. We'll chat with you guys again.
Yeah, talk soon. More alpha to come.
Cheers.